Remind us what your forecast is, because I remember that you haven't moved on that at all, or have you?
Nope, I haven't. I still kept it as 5.3 for the whole year.
Okay, does that seem optimistic now?
Not really, because we have seen a general weakness in the July data, but the main drag is in the housing market. In fact, the consumption has been improving, and in July, the data is quite obvious that the core inflation has been going up, although the CPI, the overall inflation, is going down. The import is going down, but the import volume has been going up. So that shows improvement in the domestic demand. So I actually think the consumption might surprise on the upside in the coming month.
Okay. I have to get your take on this LPR. The 1 year was cut, the 5 year unchanged. What does that signal to you?
Well, it certainly is a surprise, but not too big a surprise, because the policy intentions in the past few weeks has been quite clear that the policymakers would like to have more lendings to the real economy. And part of it will go to the real estate developers, and the rest will go to manufacturing. But for housing market, there hasn't been any intention to really boost the market demand. So we haven't seen the central government talking about housing is not for speculation but for living, but it doesn't mean they have changed their guiding principle. So I don't think there will be any significant stimulus coming out in housing. And as a result, there's really no point of moving the 5-year LPR.
Okay, so is that also the same as saying there's no need then to move on other interest rates in this economy, because it's not how low rates can get?
Well, I still think in the private sector, generally, companies need more liquidity, especially for the small and micro firms. In their process of recovery, they do need to get better access to financing. So far, the average lending rate to the corporate sector is low. But for the small and micro firms, it's still very, very high, usually around 8 to 10%. And given that, there's more room to cut. And I have seen more talks from different conferences and from the corporate sector that they're anticipating more rate cuts in the coming months. And that can help fuel more investment in the high-end manufacturing, but also in the general services sector.